Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in.
It's a company that splits opinion. Some call it overpriced, others call it the future of AI-powered decision-making. Either way, it's the best performing stock on the S&P 500 this year. And yes, you're right, I'm talking about Palantir. Welcome back to another episode of Stock Break with me, Josh Gilbert. We're breaking down Palantir Technologies today, what they do, how they make their money, and whether it belongs in your portfolios. From defense contracts to data for Fortune 500 companies, Palantir sits at the intersection of big data, AI, and government intelligence. But with a forward price to earnings ratio above 170, the question does remain, is this truly sustainable? Well, we're going to find out for you, but a quick reminder before we get started that this presentation is for educational purposes only, should not be taken as investment advice or a recommendation to buy or sell any financial instruments. And of course, if you're not already, don't forget to hit subscribe to get all the latest episodes. So on to Palantir. It was founded back in 2003 by a group including Peter Thiel, who was one of Facebook's original backers. The original idea behind Palantir was to build software to help US intelligence agencies fight terrorism through smarter data analysis. Fast forward to today, and Palantir is the best performing company on the S&P 500, and it helps governments and businesses make sense of what is complex data. Its platform combines data integration, AI modeling, and decision-making tools so organizations can act on insights in real time. Essentially, they don't just tell you what the data says, they help you decide what to do with it, and that is really important in a world full of AI. So having a look at their numbers, in terms of why the shares have done so well within the last few years and of course in 2025. I'm looking at Q1 2025, beat all expectations. Revenue was $883 million, up 39% year over year. Net profit for the 9th consecutive quarter, adjusted operating margin at 44%, and importantly raised its full-year guidance with expected revenue for the full year between $3.89 billion and $3.9 billion. But the headline number we're going to focus on coming from those results is 71% year-on-year growth in its US commercial business. The company has long been viewed as too government heavy. Revenue is about 60% government and about 40% commercial, but its commercial business is growing fast and offering solutions in energy, healthcare, automotive, and more. So again, really important number that we saw very strong growth in the US commercial business. Importantly, they've surpassed $1 billion in annualized revenue from US commercial clients as well. This is obviously known as run rate, meaning if it maintains the same pace, it will generate over $1 billion in the next 12 months from just American clients alone. Essentially, what this is telling us, the adoption of AI isn't just something that's being spoken about, it's really happening and it's being monetized as well. The heart of its growth is coming from AIP, Artificial Intelligence Platform. And according to its CTO, they're no longer talking about just co-pilots assisting humans, but we're talking about true autonomous agents transforming complex processes into automated flows. And there are some real-world examples of this. So we've got Walgreens. They've automated over 384 billion decisions a day across 4,000 stores. AIG, they've said that thanks to Palantir, it's doubled its long-term growth rate. And we've also got companies like Citibank, BP, and Hertz, and they're all mentioning Palantir's platform in their recent earnings calls. And as I say, this is a sign that they're no longer just selling platform, they're monetizing AI, and that's really important. I mentioned commercial and government earlier. The government business does remain strong. 45% year-on-year growth with expanding contracts with the US Department of Defense and NATO. And importantly, a recent contract with the US Army just delivered their first ever $1 billion contract. So again, the US spending a lot of money with Palantir. Again, does come as a risk if we do see a pullback in government spending, of course. But for now, good news. What is building Palantir? Well, it's the Maven Smart System. It's the AI platform that's becoming the standard command system for the Atlantic Alliance. It's delivered the first Titan vehicles. Yes, they're actually military vehicles designed by a software company. And these numbers were great. So we talk about these earnings. These numbers were great, but the stock still dropped 13% in the first session after earnings. Why is that? Valuation. It currently trades at a huge forward price earnings, one of the highest on the S&P 500 at around about 170 times forward earnings. That's higher than Tesla, CrowdStrike, Netflix, and so on. But The price targets also show that as well. The analyst price target is around about $100, and the stock trades around about $130 at the time of filming this. And we've got about 8 buy ratings, 5 sells, and about 16 holds. So again, great growth, but analysts may be feeling that it's getting a little bit toppy. And when your prices stretch, it's not enough just to beat expectations. You have to ultimately be amazing. You have to be perfection. And I think any sign of just sort of normal growth, or maybe not the growth that the market expected, that's going to trigger some profit taking, right? But let's be very clear here. This isn't just hype. The numbers are speaking for themselves. US commercial clients have gone from 160 to 430 in 2 years. Its net dollar retention rate, that's 124%, meaning clients are spending more over time with Palantir. And its free cash flow is at $370 million as well. Then if we look at the rule of 40, Palantir dominates with a score of 83. What is that? It's the sum of revenue growth and operating margin. And if that's over 40, the company is considered high quality. Well, Palantir is doubling that. So that's really important. And it's no surprise as well to see that, it's one of the top contributors to markets this year. And it's one of the symbols of this sort of post-tariff rebound that we saw in April. It jumped nearly 30% in just 2 weeks. And according to Goldman Sachs as well, the retail investor push behind stocks like Palantir is just one of the big reasons that we're seeing sort of growth in the US market. So does valuation mean you shouldn't invest? Well, that's the big question. Look, it's evolving from a government contractor to an enterprise AI powerhouse, and it's doing so while AI becomes increasingly integrated into real-world business processes. But the market, especially institutional investors, haven't decided whether this valuation makes sense. Is it too retail-driven, too visionary, too expensive, or is it years ahead of the market? This is the question for a lot of investors. Long term here, though, if Palantir continues growing commercial clients, driving its profitability, and continues to be the go-to name to secure AI deployments, it could keep surprising to the upside. But again, valuation remains a risk from here. Thanks for tuning in to this episode of Stock Break. Let me know in the comments what you think about Palantir. Do you own it? Do you think its valuation is too stretched? Do you think it can go higher from here? And of course, to stay updated with all things investing, follow us on all podcast platforms. Just search for Digest and Invest.